Hello and welcome to the Slip Safety Show. My name is Christian Harris. My guest today is Chris Gill from insurer QBE. Chris and I are going to talk about risk management today. And welcome to the show, Chris.
Thank you, Christian.
Do you want to give everybody a bit of a background about yourself, how you got into the insurance industry?
Absolutely. So I work for a global insurance company, QBE, which is a top 20 global insurer. We're $14.8 billion floating on the Australian Stock Exchange. We're split into multiple divisions around the world, of which European operations is one, and an area that I look after, which is the UK, Ireland, mainland Europe, Dubai and Canada. I fell into insurance about 4 years ago. Prior to that, I was an ex-Royal Marine Commando. So a slightly different entry point, but I think everybody says that they sort of fall into insurance rather than...
Got to have some tolerance for risk being
really
a Royal Marine Commando.
Yes, yeah, absolutely.
Wow. And you're responsible for risk management within those regions that you...
So yeah, I head up risk management, which is aligned to the product lines of insurance. So I have 4 key practices, one in property and real estate, another in financial lines, which looks after professional indemnity, which is surveyors, architects, solicitors, another in casualty, which is the employer's liability, public liability and product liability insurance, and finally motor. We also subdivide ourselves into industry sectors, of which construction is a major area and one of our largest portfolios in the UK.
Okay. And 16 point whatever billion that's the value of the company?
The value of the company, $14.8 billion, which is in premiums. Our margins, if you like, or our profit is...
that's your gross written premium, is it, rather than...
Gross written premium, which is the same as revenue, and then our margins is known as core operating ratio, COR. In the UK, or for my division, it's 2.2 billion of that total sum.
That's the premium.
That's the premium, yeah.
And then obviously you've got your overheads and claims and all that fun stuff, which we'll get into. Yeah, okay. So risk management. How would you define risk management?
So for an insurer, it's really quite straightforward. It's working with our customers of different shapes and sizes from various industries, understanding their claims experience, and ultimately trying to encourage them and help them to be more risk aware by reducing their claims frequency, volatility, or trying to enhance defensibility. We do that in various ways. We do it through going out to visit our clients and talk to them through a pragmatic approach, or we do it through online assessments or offering technical guidance and documents to them.
Yeah. Is it quite common that the insurers are very hands-on, or do different insurers take different approaches towards?
I think it varies. Certainly insurers take different approaches. Our approach is, as I say, very pragmatic in comparison to our peers, in that it's not just about the guidance that we follow. We actually try to get involved in our clients' businesses, understand where they are in relation to exploration or exploitation of the business model, understand what they're trying to accomplish, and then look at various areas, whether it's people risk, asset risk or property risk.
I guess that varies by size and by sector and geography. And
absolutely, yes. Yeah.
So what's a kind of, perhaps there isn't such a thing, but what's an ideal client, or what are the characteristics that you're looking for from a risk management perspective? We'd like to insure this company because of X, Y, and Z.
We understand that there's no perfect business out there, and every business comes with risk. Businesses have to take risk for them to be successful, and so we try to look for a customer that's willing to engage in risk management services as a demonstration that they're willing to continually improve the business model, reduce risk exposure, and then increase productivity within the organisation. Yeah,
and I guess there must be a clear parallel between investment in risk management, or doing it well, and a benefit from that.
Absolutely. So we offer up, on some cases, returns of premium, whereby if we expect an insured to pay a certain amount based on the claims experience that they have, yet they have fewer claims, or the claims that they do have are less sizable, then we will look to return some of that premium back to the client via the broker, and look at that premium is reinvested into risk management services through ourselves, network providers or broker services.
Yeah, okay. And equally there's a downside, I guess, for getting it wrong, which is increased premiums, increased costs, I guess. And
yeah, I mean there's lots of sort of negatives to getting risk wrong. Again, lost working time, hindrance to the business model. It's around increased premiums that they may be paying.
Have you got any stats on those sorts of things? You know, like does the premium go up by 10%, or is it sort of?
It really does vary.
Yeah.
I wouldn't be able to say an average for the UK, because it really does vary on the industry sector, the wage
on the market. I suppose if it's a soft market or a hot,
market conditions. At the moment, we're in a soft market, so it is very price sensitive. So everybody's aware of that. So premiums will go up if clients don't sort of engage and take control of their claims experience. But
I remember once a scenario where I won't say who the client was or who the insurer was, but it was a college, and basically they had such a bad experience of slips, trips and falls accidents that the insurer didn't want to write the business anymore. They went out to the marketplace, nobody else wanted it. So then the insurer, the incumbent, I don't know if they have to do it or they kind of feel obliged to, they sort of say, okay, we'll stick with you, but only if X, Y and Z, and here's your premium up here. But what they did do in that case, as you say, was they said, well look, your premium's up here, but if you take these steps, then we'll bring it back down.
Absolutely. Yeah, no, we're very flexible in our approach, and as part of our business, it's an underwriter-led business, so the empowerment on the underwriters to be able to make those conditions and those decisions is helpful to our customers. But yeah, absolutely, it can have a negative bearing on the premium. It can have a negative bearing to people who engage with that business as well. For example, if you're a retail business, you want your customers to come into your stores and have the best possible experience. And if they're slipping over or having falls, then
that's not good.
It's not good at all.
Just the same as if you've got dirty toilets in a restaurant or whatever. Yeah,
absolutely.
Yeah, customer experience is interesting. I mean, we were on a panel recently, and what was interesting that came out of that was that the people is the focus of this, and health and safety and risk management. It's all about people going home safely or going into a building safely or whatever it might be. But you kind of sometimes that gets forgotten, doesn't it?
And with social media as well and Google reviews, it's kind of magnified more now than it's ever been before. So one person's bad experience can tell thousands of people.
So do you, as part of your role, get involved in kind of building a business case then? So you with the client to sort of say, or try and convince them, maybe those that aren't quite as keen on engineering their risk better or managing their risk better. How do you go about doing that?
So we recognise that in order for us to work with our customers, for them to continually improve, there's a demand upon that customer to provide resource, time, effort, and more often than not, budget. So we do work with them around those areas, and particularly around adequate resource and adequate budget. So we can support with adequate budget in making the business case as the insurer, whereby we have a financial connection to that company, and we hold a stake within the business performance. We also work with them around the staffing as well. In doing so, we can use return of premium to help fund some of those solutions. As part of that, we've taken the commercial decision to create what we call a solutions panel, whereby we recognise that customers have a breadth of needs, varying from business interruption, wearable technology solutions, online management systems, slips, trips and falls, manual handling, and with pre-negotiated discounts which we transfer directly to the client. What that means is that clients are now able to access those businesses, best in market businesses, cheaper than before, which then supports the business case that's being made.
Yeah. And how do the brokers get involved in that normally? Sort of piggy in the middle of it? Or?
Not at all. So brokers offer their own risk management services, which tend to slightly differ. Brokers are very much around the enterprise risk management, which is the role that they play in finding customers the best possible insurance deal and actually understanding the risk transfer model that they need in place. So there's no clashing of services. So we frequently work in collaboration with our brokers to help us and pass the message and communicate with our customers, but also in collaborating on the services so that customers receive a joined up package.
Yeah. And is that typically who's the main sort of stakeholder? Is that an FD that's within the client that's kind of getting involved in those discussions, and then a risk management director? Or
it very much depends on the size of the business. For most SME businesses, it's usually the CEO or the managing director. In a larger organisation, it can be the finance director, or it can be a head of operations. or more often than not now we're seeing the roles of risk and insurance managers who place the deal, work closely with the broker, being involved because they have access to budget. So.
Yeah. And they get to go to EMIC every year and have
they
a
get to go to EMIC.
2 or 3 days
Absolutely.
of conferences and things. Yeah.
What else would you do the job?
Exactly, exactly. So you mentioned you've got this panel, of which we're obviously a part, which is fantastic, and we're very proud of that relationship. What are the, and you mentioned some of the sort of functions of that, but what sort of trends are you seeing around, you know, different types of risks that are coming up, or where you might see, you know, common attritional claims, and some opportunities for growth? I suppose big question there.
Big question. So, I mean, first off, it depends on the class of business that we're looking at as to where the money is being lost from an insurance perspective, and ultimately where clients are losing money through having to pay increased premiums. So we look at the claims trends that we frequently see. As an example, in the UK, slips, trips and falls is the highest claims cause, and it is as well throughout mainland Europe, as well as other countries, quickly followed by manual handling, and then hit by moving objects and so forth. So we try to prioritise alongside the
sort of
volume
end of things,
the volume ends, but also which can give rise to high volatility claims as well, or high costing claims. Reason being, if somebody slips or falls, you know, between point A and point B, anything could happen, and you don't know how they're going to feel.
Yeah, and you could slip on the same spot of floor as me, and we could have very different injuries, because or an elderly lady might slip on the same spot and have very different injuries. So yeah, it's a bit of luck, isn't it?
Absolutely, and with the sort of advancing technology within medicine as well, people are surviving longer and leading more healthier lives. What that means for an insurer is inherently higher costs of claims to assist with those medical programs. I mean, the average cost in the UK for a claim for slips, trips and falls can range between £10,000 and £18,000. And then depending on what deductible the client has as to how it gets paid. And
plus there's the admin costs and all this other stuff as well.
Absolutely.
And there's the discount rate changes as well, which have led to higher costs for those kind of ongoing medical conditions, isn't it? Yeah, interesting stuff. And what about something that's maybe not such at the value end, but maybe is maybe a bit more either interesting or catastrophic, or is there anything? I mean, mental health is something that's quite a hot topic at the moment. There's
a lot of things that we see coming through in claims that there's not a great deal of data on in terms from the health and safety executive. So mental health and well-being being one of them, because it's very hard to attribute mental health and well-being, i.e. stress, depression or anxiety as a lost cause. So it's inherently difficult to make a claim. With that
but
being
it's a real
said,
issue.
It is a real issue. I mean, the HSE reference it as being probably one of the highest causations for lost working time and disruption to a productive company in the UK. But from an insurer's perspective, we don't tend to pay out many claims. So there's a real divide. I mean, there's a lot of studies out there that clearly show and highlight the importance of good mental health and well-being, of which we've partnered up with another company on the panel to join us in supporting our clients.
Yeah, is that an area where, as well, you can see this kind of questionable claims, I suppose, because you know it's very hard to prove, I suppose, you know, one way or another. Where
it's hard to prove because you have to prove the sort of point of damage and where it took place. So was it the workplace? Was it in the personal life? Exactly what point and date was it? What were the attributing factors? Simply sort of slipping over or lifting something and hurting yourself is quite easy to pinpoint, whereas with mental health it's the injury that you can't physically see. So yeah, I mean, it's a challenge, but we're hoping through new partnerships and our investments into machine learning, data science, that we'll be able to acquire more data with our customers, share it with our customers and our partners, so that we can better understand some of these causations.
Okay. Touched on data and being a very technologically driven world. Have you seen anything exciting that's coming out, or worrying? You know, either exciting from the perspective of, well, that means we can manage risk better, or worrying and that's going to cause potential, like things like drones. You know, is drones a worry for you, or is that a positive?
A little bit. Drones are being inherently used more and more within industry, replacing people, particularly in car manufacturing. We're seeing more use of machine learning, again to make more informed decisions and place algorithms around data. We're seeing the increasing use of 3D printing. In terms of risk management, very much around, again, using drones to do tasks whereby people used to have to, climb up high to complete tasks or to conduct maintenance. Now drones can be used, so the risk of employees is reduced, or to the general public, but risks are now being presented in different ways because of that. So we very much have our finger on the pulse, and we're watching that very closely. In terms of sort of wearable technology, that's very exciting at the moment. We're looking at app companies and startup companies who can provide lots of data and provide services to our customers in terms of nutrition, fitness, fatigue, and mental health and well-being. So trying to encourage employees to stay fit and be in the best possible condition so they can work. Which
has a benefit for everybody as well. And I suppose that technology is new, but it's going to rapidly become cheaper.
Absolutely,
and cheaper, and it's probably going to be the norm.
Well, these things when they come out are always expensive, and then more comes out, and the market, has denser capacity, and inherently that drops the prices, which creates more accessibility to the public and to business as well. Yeah,
it's like flat screen TVs. I remember
flat screen
TVs were sort of thousands of pounds, and now you can get them for £200 or £300. Yeah,
out of Tesco's.
I know. Speaking of which, I need to get a new one. Got a nice shelf with a space, but a very small TV inside the space at the moment, so I need to get onto that at some point. So if you were giving, say, for somebody that was kind of new to the world of risk management, maybe sort of 3 top tips in terms of how to deal with it or position yourself or look at it, what would you think would be 3 good bits of advice?
I think the first one is to make sure it's connected with the business, that it's not seen as a standalone entity, and by that I mean make sure it's joined up with the HR function, with the financing function, that it's relative and proportionate to where the business is in terms of exploration or exploitation of the business model, because that will place different demands upon the workforce, upon the assets and the property within the business as well. I think the second one is to try to be joined up with the insurer. The insurer has a financial stake within the business. The insurer can also support and help a lot, certainly in terms of risk management, rehabilitation, claims management, technical advice. We have the privileged insight into many businesses across many industries, so we can share learnings, information, and we try to encourage our customers not to be siloed and hide away, so that we can share the experience and share the knowledge, which will benefit everybody. I think finally it's got to be around the people in the business. Open up lines of communication, try to break down silos, speak to people and see what's going on the shop floor, and make sure that whatever you're doing by way of a risk management program, it's actually touching the people, either through hearts and minds or doing the right thing by the business. Yeah,
all of those 3 points kind of chime true to my experience as well. So I think very good tips for everybody. Chris, thank you very much for your time. Any plugs or Twitters or LinkedIn's or websites, or is there a QBE.com/risk?
We do. We have QBE Risk Solutions for the UK, and we're also on LinkedIn as well. QBE European Operations, and the same on Twitter.
Perfect. Chris, thank you very much.
Thank you very much, Christian.
Cheers.